Hey everybody, it's Dylan Love. I'm the host of Crypto Hot Seat on the Token Metrics YouTube channel. As you know by now, we're putting out old episodes of the interview show on our YouTube channel this week as a little Christmas bonus for you. So, what you're about to watch is an interview between me and Miss Sylvia Jablonski. Sylvia is the director of Defiance ETFs. Boy, is she interested in crypto. Boy, is she interested in NFTs. Sylvia's a mover and a shaker in the legacy finance world, and she's also paying quite a bit of attention to everything that we're up to in crypto. So we want to thank you for being a subscriber, and please enjoy this conversation between me and Sylvia. Ladies and gentlemen, boys and girls, thank you for tuning in to another episode of Crypto Hot Seat. Boy, oh boy, do we have a good one today. I'm joined by Miss Sylvia Jablonski, who is the co-founder and chief investment officer of Defiance ETFs. Thank you for joining us on the show, Sylvia.
Thanks so much for having me. Excited to be here.
So there's a lot to talk about. You have a foot pretty clearly in the legacy finance world, but you're also quite the crypto fiend. If you wouldn't mind getting started by talking a little bit about your fiat experience, I guess mostly I'm curious, what is it like to start an ETF? How do you start an ETF?
Sure. So I have a little bit of history prior to the ETF world of equity derivative sales trading. So, I had experience pretty much trading ETFs and helping build ETFs for issuers and things like that. So I learned how to do it from the seat of a bank and ended up joining that world. So in terms of creating an ETF, it's actually fairly simple. It's complicated in that there's a lot of sort of operational type of work that you need to do and administrative work that you need to do to sort of set up different things like trusts and legal and custodians and counterparties and things like that. But just the actual ETF itself is essentially a process whereby you file for approval to launch an ETF under an act that's relevant to it. So 1940 Act, for example, is usually what we use. Which means that we're basically, passive rules-based following an index. And you essentially file online and it goes to the SEC. They review what you would like to put in the ETF and what you would like for it to be. And, to make sure that it passes the rules of the 1940 Act fund, it's sort of diverse enough, liquid enough, things like that. And if you get approval, you can pretty much launch it. So you pick an exchange to launch on. You find a lead market maker who puts on the original trade and seeds it. And, you trade, or you can hire a sub-advisor to do the trading for you in terms of buying and selling the stocks in the ETF. And then it's off to the races. It gets listed and, hopefully you have the best idea ever and it takes off and crushes it.
Gotcha. What's the thesis driving Defiance ETFs? What kind of companies end up in your ETF?
Yeah, great question. So I think, myself and my partners and co-founders of Defiance all come from ETF issuers that have been around for a long time, decades or more, and they're sort of focused on the traditional asset class representation, the products that they have. So what we've realized is that there's basically this new generation of traders that came into the market, and part of that happened around, COVID time. Where young traders, young college students, things like that were home from school and getting into trading. And then also money started trickling down, right? So you have baby boomers and they're sort of passing on the trillions of wealth that they've inherited down to the next generation. So it's Gen X, millennials, Gen Z, and sort of beyond have some liquidity to trade. And that's been proven in terms of the statistics and the demographics of the different trading platforms as they've reported. So what we've thought about is like, if that's true and there's this revolution in trading, particularly by young people, well, they're not going to care about kind of like the old school stock select ETFs out there, like the old school tech ETF and bank ETF and things like that. So, what do they care about? Like, what did people care about 10 years ago that are in the stocks that they're in today and have, really made money, like the FANG stocks, for example. And that's going to be the next generation of technology. So for us, it's always, what does the future look like? If oil, energy, and gas are popping right now because of, sort of the various reasons from COVID to Saudi to winters coming. But the climate change is an issue and the world economies are looking to go carbon neutral. Well, is that really going to be a source of energy, or is it going to be something like hydrogen? So we're trying to think
Hmm.
about the future, like what the future looks like in different sectors. So for technology, it could be AI, augmented reality, it could be, gaming, it could be cloud, it could be big data, quantum computing. In terms of communications, it could be things like 5G, where there's this massive push to connect rural and urban America. So it's basically, what is the future going to look like, and which companies are going to participate in building that future? And then we sort of pick sectors and build the ETFs.
Gotcha. So, at the risk of talking outside of school, I want to throw the name Kathy Wood out there. What's the vibe in the ETF world? Is Kathy Wood a competitor? Is she an ally? What is that relationship, if there even is one?
With Kathy Wood. So I don't actually know Kathy Wood personally, but I would say that she's very much a trailblazer for people like us. So she came first, and we sort
Hmm.
of give her full credit for bringing popularity to thematic ETFs, because I think she came out with sort of the first person that said, let's shake this up a little bit.
Hmm.
Let's do things differently. Like, what are the companies that are going to break things and do things in a different way? And so she succeeded in a big way by coming out with her actively managed funds in that space. So thematics have been around forever, but I would say that they haven't been as popular as ever. And part of that has been, the Kathy Wood factor. So for us, we came after ARC, and they opened up the gateway for people becoming interested and sort of tuning into thematics. And so we were able to launch some ideas that we thought were really cool, and in a different format. So what differs between our ideas and hers, you might hear a lot of the same words like revolution, disruption. We
Hmm.
very much have the same sort of thesis as she does on things in general as we discover them. Maybe we just have different sectors of interest or stocks of interest, but the theme is in line, and we're sort of allies there in terms of what we'll do well in the future. But what we do a little bit differently is we keep it, we create a benchmark, and we make it transparent, so you know exactly what's in it, what the rules are. And because we're not active, we try to charge a really low fee. So for example, our ETFs, some of our ETFs are 30 basis points, whereas some of the competitive products, ARC's products, could be over 1% or more.
Hmm.
So we are definitely trying to do it that way.
Yeah, very good, very good. Uh, Kathy Wood is certainly out as a big crypto bull. You are also out as quite the crypto bull. I'd love to ask you, how did crypto first cross your desk? Where did you first hear the word Bitcoin? Was it somebody was conversationally telling you about it, or did you just encounter the white paper? How did this become a thing for you?
This is so funny, and this is one of those coulda, shoulda, woulda. But the first time I heard about it was probably more than a decade ago, when this is such a random story, but a friend of mine had a hedge fund, and he did very well with his hedge fund, and he decided that he wanted to do like other things that are more fun. So he wanted to close down the hedge fund and like finance reality shows
Hmm.
and look into things like cryptocurrency. So I'll never forget it, because there was one day where he was saying, buy this thing. I think at the time it was like 25 cents or something like that. He's like, buy this thing. You're going to be a multi-billionaire in a decade. And it was
Hmm.
just sort of like, this is the same guy that's doing the super successful, but he's also got these like bartender reality show. This is just like not my thing. And the reality show thing. And this feels a little bit crazy. So I didn't really pay attention to it back then. And I really kicked myself. But about a decade ago, I was having a conversation with, I sort of started reading up on it and had a conversation with a lot of miners that I had actually gone to college with, and have
Hmm.
now, gotten into the crypto mining game. And it was around that time that I started getting into crypto. But I'm very much a bull on crypto. I think that, I think Bitcoin is going to be hundreds and thousands of dollars at some point in the future for various reasons. I think Ether could potentially get to 100,000 as quick as Bitcoin. I think there's going to be like a massive momentum that comes with that, and mainly because of NFTs. And then I think, I don't think all of them will survive, but I think that a lot of them will be, a lot of the cryptocurrencies and digital assets will be around. And I think that, we're going to live in a world of Web 3.0, and crypto is going to play a big part in that.
Hmm. Yeah, yeah. Uh, so I suspect you might have an interesting insight to share about what was your experience of the Bitcoin futures ETF going live last week? It's not exactly your world, but it seems pretty close to your world.
Yeah, no,
What was your experience of that news?
yeah, so it's 100% my world. And interestingly enough, we didn't file it because we like the idea of having exposure to the physical asset. And we just sort of, there's so many companies that are just filing for the same thing, right? And it's brilliant, really. So here's my 2 cents on it. I think it's amazing that it's out there. I'm all for having as many different vehicles of exposure to an asset class that people would wish to trade or like to trade out in the marketplace. And I think if you're an investor that is not savvy with things like crypto mining or perhaps setting up digital wallets or the word Coinbase and buying BTC on Coinbase is unfamiliar or unsettling to you, or you sort of don't like the trust angle of it, like GBTC and Bitwise are already out there with products, right, that trade. Maybe you don't like that format or that wrapper. So I think having the ETF out there is awesome for that crowd. And I think that'll be also for registered investment advisors or like retail in their 401ks where you can't trade GBTC or you can't buy the physical asset. So I think it's awesome in short. The other thing, though, that I believe is that you are definitely way better off buying the physical asset yourself if you can, if you're sort of savvy with some of those things I mentioned. And that's just because there's a cost with ETFs. I mean, I know it, I've built them for many, many years.
Mm-hmm.
With futures, there's a futures roll risk essentially. And you bear the expenses of buying futures and then rolling them forward over time. And there could be drag from the future to the underlying asset. So I think it's one of those things like, this is awesome, but it's probably not going to track the asset exactly. And you're probably going to pay a little bit more than you realize for the ETF. The fees kind of just get taken out of the NAV on a daily basis. You don't really recognize them. Whereas with buying Bitcoin, I mean, if you have a good trading platform that doesn't charge you an arm and a leg to trade, you're getting pure exposure to the asset. So it's definitely a great option though.
Yeah, so in the wake of the launch of the Futures ETF, there was a bunch of hubbub about how, like, yes, this is a big step forward, but it's still not something that actually covers the spot price of Bitcoin. It sounds like you would kind of similarly push for another ETF to come, or ETF to come that would actually track that.
Yeah.
Cool,
I think the best move. I mean, if I were working for the SEC, I'd be sort of thinking about why wouldn't we approve a physical backed ETF, because it's almost like there's an ETF called GLD. You're probably familiar with it, right? So GLD tracks the physical asset of gold, right? Whereas you have other ETFs out there that are tracking, gold companies or gold mining companies. And like both of those ETFs are doing awesome. Both of them rise when the price of gold goes up, but GLD tracks it more exactly than the gold mining companies ETF does. So it's just one of those things. I just think in terms of just like purity and transparency, having a physically backed ETF just makes the most sense and actually has less risk and less cost to the retail investor.
Now, I don't want to put you on the spot or anything, but I understand that you've been paying quite a bit of attention to NFTs lately. What's your take on NFTs and anything you can tell about the future of Defiance and NFTs? We're here to hear it.
Yeah, sure. So Defiance filed for an NFT ETF. We hope to launch it someday. We have a strong interest in NFTs. And, I think what's really cool about NFTs is that they're sort of taking over investing in the marketplace. And I think it's going to sneak up on a lot of people. So for example, just last week, the volume on NFTs was 9.4 billion, which was 60% more than trading of any other asset class combined. Like, I don't think anyone knows that or is looking at that, or at least very few people are. What's cool about crypto, right, is that it's, this world of decentralized finance where you can prove sort of ownership without an intermediary, and you have this currency that gives you a property, an ownership right essentially on an exchange. But what's cool about NFT is it's completely different than that. So it's the first time that using blockchain technology, you can actually own an asset, a physical asset, a piece of art, a song, a sports memorabilia clip. So it's really cool because it's the first time that, you can do this with something other than a currency. And it's this completely unique experience. And in researching NFTs, I mean, it's really going to be Web 3.0. So Web 2.0 was, as I said before, it was the social media, it was the shared economy. Web 3.0 is going to be this space where you have the circular economy of creators and investors sort of working together and deciding the future direction of a particular project. You have, in the past, we used to say sort of starving artists, right? So now artists could assign royalties to their art and give it directly to, or sell it directly to an owner via a smart contract. And for the life of that exchange of the painting in time, they receive a royalty. So it's sort of cutting out the middleman and like the fees of the galleries, the record labels, and things like that. The artist actually gets paid directly. And it's a world where I feel like it's a social and cultural phenomenon. And the big thing is people just want to participate and create together. And it's creating this really cool universe. And I think sort of the future of trading.
Yeah, it's pretty exciting to hear you talk about this. And if and when that actually goes live, we'd love to have you back to talk in more detail about what it's like to actually run an NFT ETF.
Awesome.
Cool. Sylvia, would you be so kind as to talk to us a little bit about what your personal crypto trading looks like? I assume you probably hold some Bitcoin and Ethereum, but does it get any more interesting or esoteric than that?
Yeah, I mean, I'm limited as a financial professional in terms of what I can share about my
Rats.
Yeah, unfortunately, but I mean, you can sort of assume that I'm in the big crypto names, and I dabble with with some other ones on the side, and certainly looking at the NFT world and things like that. So I'm all across the board. I'm heavily into this. My money is sort of where my mouth is. I'm very excited. I have two little kids, and they own crypto. So
very good. Yeah.
I think that it's here to stay.
Well, I wonder if you might share some expertise with a hypothetical 18-year-old person watching or listening to this. Maybe this person is interested in business and finance. So the question is, what role does crypto play in that person's life? Should it be the whole focus, or should it be something that complements a full understanding of legacy finance?
Yeah, I think it's something that should complement a full understanding in finance. So, I've sort of participated in different parts of the markets and roles in my career, and it's been heavily centric to ETFs, but you sort of have to understand what's going on in the world around you. You have to understand economics and micro and macroeconomics. You have to understand earnings and what they mean and what the future is for corporations, and sort of what inflation means and taxation means, and all of these things to large cap equities. And crypto is in my mind, it's a sleeve of a portfolio, right? So I don't think that the world will change where you won't be holding any S&P 500 or Apple or Facebook or Snapchat or Nvidia or Tesla and only crypto. I think you're going to be holding all of those things and cryptocurrencies. So I think that it's really important to learn about these things. And the good news is it's so much easier now. You can just go on YouTube. You can listen to you guys and your guests. Like, there's so many different sources of information for crypto out there where you can really learn about what it is, how it can benefit you. And I would highly encourage young people to do it and invest in it, especially if you're young. You have a high risk tolerance when you're 18 years old. And, if I were 18 years old, I wish I, knew then what I knew now, kind of thing. But I would definitely have some crypto exposure and just let it ride until I was, 48, 50,
yeah, very good.
Whatever, pick a number.
Yeah, very good. It's completely interesting to me to kind of see like this very high wall around finance kind of come tumbling down a little bit.
Absolutely.
Not to imply destruction, it's just to imply the game is changing.
Yeah.
And it's like by paying attention to people like you, your colleagues, and people who operate in your sphere. It's just want to thank you for sharing a little bit of time and expertise with us today, Sylvia. Thank you so much for joining us on the show.
Thank you so much. Thanks for having me. Thank you.
My pleasure.